I want a movie about a superhero, and his name is Fiduciary. And he saves people's financial future.
Nothing but trouble on my mind. That's the attitude that got my ass off the sidelines. You either ride.
Welcome back to Chasing Finance. Here we are with my good friend, mentor, legend, dare I say, GK founding member. And this is a newly titled podcast. It used to be Finding Finance, but guess what? Now we're chasing it. Because someone said we could never find it. We'll always be chasing it. And isn't that poetic? Yeah, I think so. So here I am today, joined by the legendary founding member of Gerber Kawasaki. He's been fired 3 times, but he refuses to leave. Why? Because he's family. He's a founder. He's a legend. He's an insurance director. That's right. Bryan Miranda, UCLA legend, father to JJ. It's almost Father's Day, by the way. And did I say founding member, by the way? Alex?
Yeah, I think you did.
Okay.
I think you did.
We'll start it over.
Are we gonna get to the end? I didn't know this was a monologue.
That's what it is.
Are there questions? Are there prompts? Are there anything that you want to know about?
Ooh.
Nobody exactly goes into the big broad world of boring insurance unprepared.
And I'm prepared. That's the thing. Bryan Miranda, welcome to the show.
Hi, Chase. Thank you for allowing me to be here today. You know, it's I don't even know what to expect at this point, but I think we're going to get into it.
1 or 2 intros later, and all of a sudden we're in the thick of it, right? And that's kind of the whole thing is shock and awe. And do I have questions about insurance? Yeah. Did I ask some people on the internet, what do you want to know about insurance? Yeah, a couple responded. A couple of my girlfriends, they said, hey, I just got car insurance. What is that? I said, I don't know. I don't have a car.
You don't know what car insurance? Okay, that's fair enough.
You can see where we're starting here.
Maybe e-bike insurance?
E-bike insurance. Bus insurance.
Pedestrian insurance?
Okay, so this is what I really want to start off with.
Is this going to be the first episode where we actually start off on topic?
Exactly right. Thank you, Alex. We're starting off on topic because I've done the research. I've read about insurance. And at this point, it seems like you can just make up your own insurance. And I'm dying to know, what's that all about?
I think we should make up e-bike insurance for you
specifically. And I don't have a helmet.
You might not need one.
Brett said he's going to bring me a helmet. Alex said he's going to bring me a helmet. And guess what? Alex's wife said no helmet for him. His head's too big. And also she's a doctor. So I think she's looking to cash in a little bit. But guess what? Maybe she just wants to protect Alex.
I think Mia actually wanted some life insurance on you in case you eat it in an accident on the way to work.
Life insurance. Okay.
You can just put her as beneficiary.
And life insurance is an important part for a high net worth individual's insurance plan. True.
It's one of the variety of insurances that you.
Okay.
We already got to e-bike insurance and bus insurance and pedestrian insurance.
So so that's real.
I don't know if it's real.
Bus insurance?
Probably not real.
I'm paying $1 a day. And if something happens to me, I don't get anything in return. Would I rather pay $5 a day for bus insurance than if the bus breaks down, do they owe me? Yeah, that could work. They're never on time. Maybe after, 17 minutes of waiting for the bus, I could get a little cash app from the city because of bus insurance. All right, this seems like another time to do another intro. Welcome back to Chasing Finance. What are we talking about today?
I leave all the intros in, so it doesn't make any sense to just do another one.
We talked about insurance. We're talking about bus insurance now. We're talking about, I don't know.
Let's talk about some practical insurance.
Okay.
E-bike, bus, pedestrian. No. Car insurance.
Car insurance? Okay, I got a list.
Multiple girlfriends has car insurance. You need that. It's mandated by law, mostly.
Okay.
If you get in a wreck.
And her dad just bought her a new Bronco, which I was like, that's unfair.
Like a new Bronco?
Like a
or like a new old
No, not that good. Not that good.
Those kind of suck.
The new Bronco.
Like if you give me like an OJ Bronco, I would probably rock with that.
Dude, I took a picture of one I saw on the street 2 or 3 days ago. Look at this Bronco.
Girlfriend's dad bought her a
new Bronco. But now she's got to pay insurance on that?
Your question?
Is it really? I don't know. She wrote a question. I don't know what it was, but like, How should she prepare or something?
You gotta buy insurance for the event that you get in an accident, right? You want to
Okay.
make sure that if something happens, that you're safe when it comes to healthcare bills. The
Okay.
other party is safe for healthcare bills. That you're able to handle property damage to that other person's vehicle.
And what exactly
your
is
own-
property damage?
Yeah, if you wreck a car and you throw it into somebody else's car, you need to be able to repair their car. Or what mostly happens now is they just like demolish the car.
No fault.
Give you money to go buy a new car.
Okay.
That's property damage. Health
Nice.
damage is if there's injuries or death or whatever during an accident, right?
That's health?
There's also other ancillary benefits like, let's say you're out of a car for a while, you need a rental car.
Oh, Hertz, right?
Hertz, Avis, whatever. It doesn't really matter.
Yeah.
It gives you the opportunity to get something without it having to come out of your pocket.
Yeah.
Or maybe it's reimbursable.
And last night I was listening to this Ye lyric and he said, I don't judge rentals, but everybody hurts. And I didn't realize until now what that actually meant. That double meaning hurts. I was like, whoa. Bar.
If Chase was to borrow my car, because he doesn't have a car right now.
Okay.
Chase, we know, has no car,
No car.
no redeemable value.
No
that
girlfriend.
We
Well,
can actually
yeah,
see.
it's
No
true.
specific girlfriend that I hear likes him back.
Exactly.
But if he were to somehow borrow Alex's car,
Okay. And this is a good example because I could actually apply this.
Alex's insurance on his car that
Uh-huh.
Alex so graciously pays for like a good member of society
Yeah.
would step in
Let's
case
go.
you mess up.
We really did that, Alex. Thank you.
What a good friend.
I
What a
don't
good guy.
I don't let him drive my car.
Well, Mia lets me drive her car.
So either way,
So
Mia's
here's
got
what happened.
insurance, Alex has got insurance, everybody's got insurance
Yeah.
to make sure that you're not going to cripple them in debt. Because you know
Yeah.
what happens? If you wreck Alex's car
Mm-hmm.
into a really nice car, you hurt somebody, they're
Yeah.
going to go after
Hurts.
his insurance.
Really?
Yeah.
Okay, and I
They
actually
might
know
still
this.
sue you.
And I
They're
actually
gonna
know
go
this
after his
though.
insurance too.
Because this guy gave me a ride to an airport once, and I won't tell the full story
Was it an
about
Uber.
no. It was an Uber asshole though, because I hate this guy now. And I wanted to tell the whole story about it. It was like Thanksgiving, and I didn't want to work at this movie, but I had to make money working on this movie. And then I got there, and like this guy like might have COVID, so I'm the COVID compliance officer, so I give him these COVID tests, and then I had to shut down a feature film within the first 30 minutes of production, which was crazy, by the way. But the whole time I was praying. I don't want to talk about it. Then my friend gives me a ride. This guy I barely know gives me a ride to an airport. I hop on the flight. I'm there. I'm gone. And then I'm like, Hey.
Are you chewing gum?
yeah,
Will you spit that out?
sorry.
Alex, you think he's going to land the proverbial plane on
And
this little story
Okay.
he's got here?
So then I'm coming back and he's like, yo, by the way, I did crash your car, but like I gave them the insurance, like everything's fine. And I'm like, what? And he's like, yeah, I know you're coming back tomorrow, so I just want to let you know, like, oh, last week I crashed your car into somebody. I know you didn't tell me that I could borrow the car more than just like giving you a ride to the airport, but I actually took it to go Black Friday shopping, and then I missed a parking spot and I reversed into somebody behind me. And this is what's interesting is my insurance went up. So
I don't think it's very interesting at all. If you make a claim on your insurance,
but I didn't make the
it
claim.
doesn't matter. Somebody else who's driving your car, there's some amount of money that Allstate or State Farm or whoever now has to
Mhm.
pay because of some at-fault problem that you had or your friend had or whatever it is. So your rates go up. That's how it works.
Dang.
There are a handful of companies out there, even though I think it's kind of scammy. They say, oh, well, if you don't have any accidents or any problems, that your rates go down over time.
Yo, which ones are those?
Yeah, I think it's like Allstate and a few others.
Okay.
There's commercials.
Can I put the glasses on?
You can put the glasses.
Let's
You can
go.
put the glasses.
I've got a big head, but yours is pretty big too. Oh, I think mine's bigger. Oh.
Why we still on
And
car insurance?
we having fun? Yeah, we've got a lot more. That'll probably get cut out. Most of it gets cut out. So.
I
All
hope
right.
so. Like that entire story about your Uber.
Dang, I thought it was fun to look at myself 2 minutes ago. Now I'm having a blast. All right. GK founding member, insurance director, UCLA legend too, by the way. Because I lived over in Westwood for about 4 months and people were still talking about you.
I'm glad I have a lasting effect.
The legend of Bryan Miranda lives on forever and ever. And
still pretty involved over there, so it wouldn't surprise me.
it's true. You won, you're a big Bruin guy. What's the word that I'm looking for?
Alumni.
There it is. So, what was Westwood like back in the day? Does it seem like a little less fun now? I feel like there's only really one major bar people are going to. Otherwise,
I think it's one of these situations where I think it was more fun at the time because it was during my period while I was there.
It's true.
And it's just, well, the younger generation sucks. Well, that's just kind of life, right?
Yeah.
Nobody has fun. Also, the rise of Uber and Lyft.
Yeah.
Back in my day, that didn't exist. So if you wanted to get outside of Westwood Village, you had to take an actual
Bus.
taxi. You could take a bus. Taxi to Sunset, to Santa Monica, to, wherever.
So people were taking taxis
People
back
were taking
then?
actual taxis, or the big blue bus was like 25 cents.
BBB, yeah, I take it every day.
But outside of that, you'd either go to dorm parties, frat parties, apartment parties, or Westwood Village.
Okay.
Now, I don't think Westwood Village is in the mix anymore. Maloney's was there, turned into O'Hara's. O'Hara's turned into Rocco's. It used to be Westwood Brew Co. That turned into the Boiling Crab. Do you think college-age students want to go to the Boiling Crab?
I have a shellfish allergy. So, I'll tell you straight up, I ain't going. I mean, look, if God hasn't got me yet, he's coming for me soon.
That's a bar.
And that's why we need insurance, by the way, right? Who's going to put
Great
insurance on
segue.
my life? They could get rich.
Anybody.
Yeah.
No, actually, it's not anybody. It's you. You are the one in control of setting that up. You purchase it, you get it underwritten by some company, and then if you die, somebody else gets paid. Right now, it doesn't sound like it's one of your multitude of pseudo-girlfriends. It's probably like
It's true.
Your family.
Yeah,
your
my sister. Nice.
Your sister would
I
probably
know.
be the one to...
D1, by the way. Imagine being a top recruit in the country. You're committed to
It's going to
LSU.
be pretty interesting to see what happens with all like the non-major sports. So, football, basketball, I get it. But what happens to cross-country, golf, swimming,
LMU just cut all of those.
Yeah, they have to.
Yeah.
Like I know the House, and they had this NCAA versus the House settlement that happened, a few days ago from the last 5 years worth of arguing.
Mhm.
And they're going to have more change on it anyway.
Yeah. And you know what they say about change is the only constant.
Thank you.
That's my favorite
I'm going to the
paradox.
bathroom. When I get back, we got to talk
All right.
finance.
We actually watched the Lions beat the Rams in our first playoff win in a long, long time.
Rams gave up that game.
When you're Matt Stafford, I don't think you're giving up anything. See you later, Super Bowl.
Whatever. I've had a really good run of football the last, 20 years.
Let's get into it.
No, we got to get into finance.
He always cuts out the football too. That's the thing. He always cuts out the football.
I mean,
all right, so do you have any questions on there?
I actually got a lot of good questions.
Let's get through it. Can we rapid fire some of these questions?
Yeah, I do. Actually, okay, we're going to skip to the rapid fire thing.
I got places to be.
Okay. Skip.
I would love to.
Wait, I don't know if we should just go right into rapid fire, but I'm going to start rapid fire.
Are any of the ones you just skipped good questions? Like what?
No. I'm skipping to the questions portion.
We hear there's no good questions.
All I know about
apparently not.
Here's the thing. All I know about insurance is that it's corrupt. But before we can actually get into the corruption of insurance, I need to find out what insurance even is.
Okay.
So Bryan Miranda, director of Gerber Kawasaki. So Bryan Miranda.
Good one. Keep that. Keep that.
I don't know why he restarts. I keep it all.
Gerber Kawasaki. That's whoops. We messed up.
So Bryan Miranda, director of Gerber Kawasaki Insurance. I have to ask you one important question before we can even get into this deep dive we call a podcast. What is insurance?
It's like, what is air at this point?
Wow. Expert opinion. Here we go.
All right. I'll try my best for such a broad question. Okay. Insurance is transferring risk of something happening from you to somebody else willing to take on that risk. For
wow.
example,
Okay.
For example.
Keep going.
All right.
That was good.
Life insurance, it's the most common, well, maybe the most common one.
Okay.
If you think you're going to die and you want to make sure that your spouse or parents or somebody else is not going to be financially decrepit because of you,
Mhm.
right?
Yeah.
You buy a life insurance policy from XYZ company. There's
Okay.
a million of
There's
them.
a lot.
There's thousands.
Oh. Okay.
Well, not if you think you're going to die. If you, it's more, isn't it more so to protect
It's to
people?
If you think you could die.
It's,
Well,
we'll put it this
anyone
way.
could die.
It is to protect against the risk of you dying. You're
Yeah.
not thinking you're going to die, but what if,
Okay.
right?
Yeah.
Let's take my scenario. It's a little bit more pertinent because I have things to lose.
Sure.
Maybe not so much for you. But
Well, I
for
don't
me,
know. I've got a lot of bleach t-shirts.
If I die, my wife, my son, they are not going to be having a very good time. Right?
That's true.
Because now all the income that I bring in any given year,
Director of insurance.
it's gone.
Gone.
So I have to make sure that if something happens to me, that there is a stream of income or a set
Yeah.
of assets
Yeah.
that my wife and son can have
Mm-hmm.
paid out by some insurance carrier
Yeah.
upon my demise. Right?
Who's
That's-
going to pay for JJ's diapers without Bryan Miranda here?
Well, hopefully he's only another year.
I've been to his house. He's got a pool, guys.
You can't buy life insurance without having a pool. apparently.
Exactly. So and that's something we'll get into later. But first, we should talk about this whole life insurance thing. So
Oh,
basically, you think there's a possibility. You feel responsible for this family. He's got a new child, JJ, is about 1 or just
14
turned
months.
2, 14, and a wife. So you buy that so that if you go as, the provider for them, then they
We'll put it this way
can-
for easy math. Let's say
Easy
you have
math.
somebody who's making $500,000 a year.
Okay.
Okay.
Boom.
They are no longer there. They
Yeah. Dead.
Now that $500,000 a year is no longer
Poof.
coming into the family.
Poof.
So you buy a $5 million policy.
Okay.
Theoretically,
Wait.
that takes care of 10 years worth of that person's gross income.
Yeah.
I'm simplifying
5
this a little
mil?
bit.
That's that kind of numbers we're dealing with?
Yeah, I mean, in West Los Angeles, yes. If you're talking about the middle of Michigan, maybe not. But
And there
it's
it
all
is.
relative to
Okay.
what your situation is. If you
I'll
make
take the hit, but
Here-
how much
here's
would you
the-
have to pay for 5 mil? Like easy math.
easy math, 5 mil for a 30-year-old, 20-year fixed term, I don't know.
Oh, fixed term.
$150 to $200 a month if you're super healthy.
Oh, that's a lot though, actually.
Yeah, but you don't need 5. You don't always need 5. You need $1 million.
Okay.
20 years if you're 30, have a wife, have a
Okay.
baby. 20 years, you're probably looking at, I don't know, 50,
Well,
60.
then, okay, 20 years
50,
later, what
50,
happens
60
though?
bucks a month?
I'm still around 20 years later. I just gave you, let's say, $200 a month, so $2,400 a year times 20 years.
It's a lot of money. that goes in there.
48,000 or 4,800? $48,000?
I hope we're not landing on the moon with those estimates.
I don't know.
What happens is you put all this money into it,
Yeah.
you're not getting any of it back. And you
Okay.
know what else happened?
What?
You didn't die.
I'm still here.
You're still here.
And I thought I was going to
You're
die.
still here. You can do the whole Leonardo, I'm not going anywhere speech. You didn't die. The idea is that you were able to use the majority of your other income to build up your assets, buy real estate,
Okay.
invest in stocks and bonds and whatever, so that by the time those 20 years are up or 30 years are up, it doesn't feel so bad
Okay.
feeling that you just spent this money that went nowhere.
Oh, so you're telling me that life insurance is not an actual financial investment tool.
Term insurance is not.
Interesting.
There are permanent
So-
policies that get a little scammy
Good.
that can be investment.
So the second you started throwing around that $500,000 or $5 million payout to my family if I died, I'm starting to think, why do I want to put money in my Roth IRA when I could potentially get my daughter Charity $5 million?
charity.
But you're telling me, look, I might name one of my kids Michael Motown McCormick. Is that a good name or a bad
I hope
name?
for a daughter, that's great.
Eminem and M. Michael Motown McCormick. So, okay, but here's what I'm thinking is like, okay, so should I
it's
skip out
about-
on the retirement and
No,
start
no.
getting insurance?
It's about balance, right?
balance. Okay.
Insurance is only supposed to be one piece of the whole puzzle, right? So I'm an advisor,
Uh-huh.
comprehensive. We do all the management of your stocks, your retirement accounts, your 401k, your kids' college funds,
Okay.
everything, right?
Yeah.
And I think what happens too much in this industry, for the insurance industry specifically, is there are insurance salesmen, there are agents out there that say, you know what, Chase, you can save $1,000 a month based on
Mhm.
what you make versus what you spend. Okay. that would be great. That's probably not close. What
no
you
one's
can
ever
actually
said
do.
that on my podcast before.
Okay, maybe you can save $12 a month. Either way, let's say it's $1,000. A lot of companies out there will coach their employees to go ahead and say, all right, you can save $1,000. Let's go ahead and throw that into like a whole life policy.
Whole life. Oh, that's good. I've heard about that.
So is this? I was going to ask you about the whole scammy portion because I have a universal life insurance policy.
Yeah.
Whole life
which I was told starting.
I think I had a little bit to do with that.
You did, yeah. And starting at the age I did, was told that's going to be a really good idea when I get older. At what point does it become not a good idea? Like, what's the scammy portion? Is that when they tell you?
Portion? It could be John.
Oh,
let's go. Okay, John, what do you know about insurance?
Please tell me I got the pink one.
Of course.
What did you order me?
Gotta look at the camera.
Have you ever been in a car accident? Ever been in a car accident?
I thank God every day I haven't had to use mine.
Ever broken a bone?
Never. I broke my foot when I was a kid, but
okay.
Who
paid the bill?
Think it was.
I don't think you had insurance. Your parents may have had insurance.
Oh, they definitely did.
Probably just regular health insurance.
Oh yeah, we had because an HMO that's what you can get from an employer, right?
John, thank you so much for being here. We love you. Everybody clap it up for John. And drop a comment too, by the way. I haven't quite said drop a comment yet, but guys, we want to hear from you. A little more John, a little more Alex. What do you think of this Bryan guy, by the way?
Can we get back to whatever the
doing
question?
Your insurance and
What was the question being answered?
I think we were rolling a little bit with the...
no, I've got a lot of good questions.
It was going back to your example of your policy.
Yeah, when does it become a bad idea?
Be terrible or not?
Or a scam, yeah.
For me, it's all about how it's originally set up, right?
Yeah.
In my example we were talking about, let's say he can save $1,000 a month. Most insurance salesmen will say, do that $1,000 in a whole life. It's going to buy your house, make you retire, send your kids to college, be your savings thing, because you do these like tax-free loans and arbitrage, and it gets...
So where's the line? Where's the line?
Hold on.
All right.
It shouldn't be that. If you have $1,000, it means you should be putting money into your Roth, your kid's college fund. Like the 529 is meant for that. Might as well use that account for that specifically, right?
Okay.
You open up a brokerage account. You put money in your 401k. You have high yield account.
What's brokerage?
Just investments.
Okay, keep going.
Right?
Yeah.
You spread it out so that out of your $1,000, maybe $50, $100 goes into insurance. But it should not be the focal point.
So
of your
5%.
plan.
We allocate 5% the same way we're doing with crypto.
2.
So crypto, maybe we want to go 5.
2.
Life insurance, home insurance.
2%. I normally don't recommend anything more than 2% of gross income on all your insurances.
And now we've got the number.
You're just kind of you're wasting money. And to answer your question is, if you are overfunding it to a point where it's taking money away from your other objectives, that's a problem, right? You're just devoting too much effort to one thing that's so far into the future.
So I have the universal policy. My wife has a term policy for 30 years.
Dang.
I'm going to have to get a term policy eventually once we have a kid because my universal policy doesn't pay out that much.
Sure.
At what point is this universal policy going to pay off for me? Like when, I know they say you sell the policy.
Well, here's the nice part about yours. If it's funded correctly, it's going to pay sometime. It's permanent, right? So a term policy, it's only going to last you 10, 20, 30 years, whatever it is, right? Your universal life policy, I believe it's indexed. It's going to last until you're 120 years old, right?
But at some point, I'm under the impression that I can
take out.
I can decide we have enough money. Our kids are fine. I want to do renovations on the house. I'm just going to pull from it or sell the policy.
What?
With anything else, it's about compounding interest, right?
Yeah.
So you have the separate account inside the insurance policy that is going towards the investment.
So that's
right?
the balance
that's
I see.
The cash value that you see.
Yeah.
That over, I'm talking multi-decades worth of time.
Okay.
That's where you can draw from, right?
And
I'm not saying you should use this 10 years from now. I'm saying like 30 years from now.
Yeah, or more.
Okay. You guys are saying a lot of big words. I wrote some of these words down, but now I got to understand what some of them mean.
Okay, go ahead. What's your question?
There's term, there's permanent, there's universal, there's whole. And now I'm learning you can pull from a policy later on.
There are two broad categories of life insurance. Term and permanent.
Permanent, okay.
Term is to cover liabilities for a very cheap cost.
Term.
You can get $1 million for $30 kind of thing, right? If you don't die, then those premiums that were going into that policy just evaporate. They go to the insurance carrier. You eventually cancel that policy or it goes past its term timeline. You don't get anything back. It's
so
like
it's a higher risk, higher risk, still a good reward, but lower reward, $1 million?
I don't know if we're going to term it out.
Higher risk, though. Higher risk, less money.
Higher benefit, less premium.
Higher benefit, less premium.
Less chance of you actually dying.
And premium.
You're probably not going to die during the term period, right? Unless there's some like very weird, a car accident, like something bad happens, right? It's a black swan event.
Okay.
Think of it like car insurance, right? But you never actually get into a car accident.
Mm-hmm.
You don't have a car. Alex, you have
I had a car. I sold it.
You have a car. You pay auto insurance.
Yeah.
When's the last time you actually had a claim on your auto insurance?
When I was 16.
Okay. So you've gone probably 15 years worth of premiums to XYZ company.
Shout them out if you want to.
And nothing for it, right?
Yeah.
Same concept of term insurance.
And
but you're going to be thankful when you actually get into a car accident and you actually have it.
Yeah.
Hence why insurance.
But is America corrupt that they force us all to get car insurance?
I don't think so, because then...
No, I agree that everybody should have car insurance.
And that's because you guys are rich.
No, it protects you when somebody hits you.
But here's what's crazy. And Michigan is a no-fault state. So it's like half the people, like my brother ran into a couple of ratchets in Detroit. They didn't have insurance, but then they just charge them no fault, no accident. And then our insurance gets
So there's something called uninsured motorist.
Yeah.
Which you add on to
jail,
your policy
right?
In case you run into somebody who doesn't have car insurance.
No way. That's a thing for that?
That's a thing. So that I don't get completely hosed on that bill. My insurance kicks in because I was protecting against me hitting somebody who doesn't have insurance.
So, okay, now I'm seeing, so insurance is one of those things where you can like keep buying more specific things. And then if it's like kind of like if it hits, then you're actually getting paid out more.
Kind of. It's like it's like hard fours when you're playing craps, right?
Okay.
It's a more specific bet, but it's going to pay higher than if you're on the pass line.
It's like a lotto ticket, right?
Sure. I would say my example is better, but we can go lotto ticket.
Okay, so
going back to your point, I gotta land this bird here.
Land the bird, land the bird. I got you.
If you start one of these permanent policies and it's intended to build up cash, starting it anytime after, I don't know, 50 probably doesn't make any sense because it doesn't have enough time to actually accumulate the values. And by then, the actual cost of the insurance, what happens if you die, can that company afford to pay your family, right? That cost is going to be higher because you're older. You might be more sickly, right?
Yeah.
There's varying levels you can get approved at. So once you get past that point in time, it's just insurance at that point. You're no longer in a category of, oh, I can use this to build money up and then borrow against it later down the road. You'd be waiting until you're 100 years old before that becomes viable. But if you start one of these and if you're 25 to 40 years old, roughly, then that part of the plan could be okay. That doesn't mean that you should neglect your 401k, your other investments.
So it's in a weird way, it's a gamble, but you're gambling on bad things happening.
Well, the idea is you're going to need the insurance anyway, so you might as well have it. So for you, you're going to have it for the rest of your life. If you actually use it for the cash inside the account, remains to be seen. It depends on performance.
Wait, what's the cash inside the amount?
That's the cash value of the account.
Okay.
You can borrow against it. Tax-free.
So, okay, does it go up the more you pay? Wait, borrow against the tax-free. We're going to get back to that.
So could I buy a car and borrow against the policy in the future?
Yeah.
Okay.
Whoa.
If there's cash value inside your account.
And then do I have to pay?
You can decide to pay it
So that's
back
like a bet on the bet?
Oh, okay.
So if let's say there's $100,000 in cash value in your policy and you want to borrow 50 grand for a car, you could take the 50K out. You are now paying an interest rate to the insurance carrier for that 50K.
Not to yourself?
It eventually goes back to yourself. Hold on. Let me finish the thought first. The 100,000 that the cash is in the account, the cash value, that is still growing at whatever the value is growing by. If that's growing by 6%, you're going to make $6,000 on your 100 grand.
Okay. So it doesn't take the actual cash value out.
No. It's a loan from the insurance carrier.
Got it.
Right? So if that 6% on the 50K $3,000,
Mm-hmm.
you're spending $3,000 in interest while still gaining $6,000 in cash value.
I
You're
see.
still ahead. You're still ahead in that deal.
Yeah.
Right. So you can use it. If you were to, this is the other question, is do you need to pay it back? You don't have to. It's nice because if you do, then the full $100,000 or whatever that benefit is, let's say it's a $200,000 life benefit, death benefit,
Mm-hmm.
that whole amount would go to Hannah,
Mhm.
right?
Yeah.
If you have a $50,000 loan outstanding because you bought that car, it would be the 200 minus what you owe. So then 150 would go to Hannah.
Interesting. Okay.
So you
and I'm
can,
completely zoned out is the thing, too.
I know it gets dense.
You know, it's dense.
This
So I
is a
just want to know.
very- So this
Okay.
is a very like boring.
I know,
kind of
exactly. But
part
I
of
got
finance.
the good thing is I've got the dumb questions ready.
You have always got dumb questions.
Exactly.
So,
And
like-
welcome back to Chasing Finance. So we've learned about term, but what the hell is permanent mean?
All right. So permanent means that it should
Should.
never expire. Okay. It should
Oh.
last until you're 100 or 120 years old, depending on the company.
What?
There are a variety of permanent policies out there. There's variable life, universal life,
Okay.
index life,
Index life.
whole life.
Oh my God, I got to write
There's
this down.
there's a lot.
Oh, that's
okay?
whole. Okay.
Yeah, they're all different types of permanent, right? Whole life is not interchangeable for permanent.
And
Whole life
Jeff
is
Kim
just
told me whole life's the best one.
well, I don't know about. Does Jeff Kim run the insurance division with our
Well,
company,
no,
or is
that's
he the
why,
401k
that's
guy?
why we're here.
Yeah, so I handle all of Jeff's insurance.
Okay.
plans. So whole life is appropriate in certain circumstances,
Okay.
right? It's not that whole life is bad. Index, variable, universal, they're all okay.
Okay.
The problem
Which is the best?
There is no best.
Okay.
It's each person's situation is going to dictate which of those is going to be best for them. The problem with it is,
Okay.
do you need it at all?
Hmm.
And there's
And I
only
don't.
a handful
I don't.
of people.
Right?
Right now, you probably don't.
But
You-
would it be smart for him to start paying into a whole or a universal policy?
I think that once you have a good footing, you have your
And I-
Roth set up, you have your IRA set up, your
And-
401k.
Yeah, and
you
I literally begged Alex, do not make me go over my finances today, please. I don't
You-
want to talk about.
You asked earlier what a brokerage account is.
Yeah.
I hope you're just like,
No,
with me.
I don't.
Do you have a non-retirement
Yeah, I
account
do.
set up?
I do.
Here's
You
the
have money
part-
going into
No,
it.
I do, and I'm never gonna sell it. By the way, if you sell, you're a coward, and I'll say it again. I'm never gonna sell.
It's a
teaching-
liquid account for a reason.
I was teaching one of my girlfriends about stocks yesterday, and I said,
You always say one of your girlfriends.
if
I
you
want like
ever
living
s-
proof. Oh yeah, she goes to the other school. That's what I hear every time. you
look,
go
she
with
did
that.
go to school, but she just graduated, so congratulations.
high school.
I mean, okay, look, cut the cameras. Look,
This is a good time for you to tell him because Chase does have all the right.
we don't have to talk
accounts.
about my girlfriends right now.
No,
Look,
No. So
I've got
let's-
too many insurance questions.
All right, without going into numbers,
Some get mad though. Okay,
you have your 401k that you're putting into here.
I've
correct?
got okay
There you go. This is your time.
401k, and I've also that's a traditional. So
you have a
Traditional 401k.
I've got two Roths. So I've got a Roth 401k and a Roth IRA, and then I think got a non-retirement, which is my traditional.
no.
Close. So
Go
you
on.
have your
I've got two Roths, Roth
For-
IRA,
for
Roth.
the
Roth
GK
traditional.
for the GK 401k. Let's
What was your
whatever.
question? What was your question?
You have GK 401k.
GK 401k.
You also have a Roth
3%.
IRA.
Yep.
Okay. You have your non-retirement account that you're putting in a certain amount of money each month.
Yep.
You have your bank account.
And Mia told you about contributions upped.
Good.
Yeah, you were happy at lunch when she said it.
Do you have a high yield savings account?
No.
So this
And that's
becomes
the
more
Kyle
like
episode.
the emergency
Yeah.
kind of fund, right? You don't have a
EF.
kid. You don't have a 529 just yet.
Oh.
Your Roth IRA. Are you going to max that out for 2025?
Well, here's the cool thing, and a lot of people don't know this, but if you live in LA, you can actually still be working on your 2024 Roth IRA. So I'm still putting money into that in hopes that because of the fires, I can max out my 2024 and then go max out my 2025.
That's good. That wasn't my question. But assuming
Okay.
you can max out your 2024 and your 2025,
I'm not quite there, but
IRA,
with my bonuses,
let-
I could.
let's say you can, all right?
Cannot?
you can.
Can.
I feel that once you're able to do that,
Mm-hmm.
and once you have a steady flow of funds going into your non-retirement accounts,
What's steady?
you're not, I don't know,
500 a month?
I would say 5 to 10% of your income.
Oh, okay, cool.
Okay.
I can handle that.
We want you to be saving probably 15 to 25, maybe 30% of your income overall, right?
I know.
Especially if you don't have a home or any bills or any liabilities.
Or a
Your
car.
bar tab's not that bad.
I still don't have a car, dude.
Okay, fine. Which means you should be able to save more.
Yeah.
He has
It's West LA. That's
That was the
$1,000 a
point.
month
you
for a
have,
car.
you have the least bills you're ever going to have in your life.
And that's the hardest part.
It's the biggest opportunity.
But you know what I mean?
Either way, once you have your IRA fully funded consistently, once you have no credit card debt,
Done.
once you have at least money going into your 401k,
At least the match.
to
Like we
whatever
say,
the
at least the match.
is. Each
Yeah.
company has different programs, right? Have the match going in.
Mm-hmm.
Then, only then,
And only then.
you can start entertaining a little bit.
And
of
I've only-
income into the IUL. Kind
And
of
I've only got one question, right? So, like, let's say my time's come. I'm ready for insurance. Am I going term or am I going permanent?
For you, you'd be going permanent.
Ooh. So you start with permanent. And can you have both?
You can have both.
Okay.
You would eventually layer on term once you have liabilities or people you care about or
Mhm.
reasons to have term.
And do I want index? Do I want whole?
It becomes comfort.
Specific to your situation.
I've got a VUL.
VUL.
All right. Most people don't have variable
Ooh.
policy
Vol.
just because everything else that we handle are variable in nature, right? If you have money in the stock market or invested in funds that can go up and down with market pressure, right?
Mm-hmm.
You don't want to add on one more layer
Yeah.
of risk.
Yours can go down?
Mine can go down,
Oh, interesting.
but I run this program. I'm
Mm-hmm.
an advisor. I know the risks.
Mhm.
Most
Mhm.
people can't handle the risks, right?
You can't
Because of
handle the
that-
truth,
So
Marissa.
does that mean that the Marissa?
Oh, sorry.
Does that mean
I said that out loud?
does that mean that the upside is a lot greater than say like my
Yeah,
policy?
So I'm going to have more upside and more downside than what an indexed universal life policy is going to have. Index means you can't go backwards. You can't lose,
Mm-hmm.
but you're probably only going to hit maybe 7, 8, 9, 10% a year.
Okay.
That's
It's
lot,
a more
though.
solid version of being able to allocate funds when it's part of the rest of your plan.
Okay.
I don't want a variable life plan to hurt a client of mine's ability to get to their goals because that piece fell.
Yeah.
I'm fine with taking the risk. That's
okay.
me, right? I don't really recommend it for clients.
But you got clients out there and you're not going to burden them to have to sit there and think about all these risks and all these variables.
Talk to your
They're not
advisor.
expert. You're an
one of-
expert.
Every one of the advisors in this
Yeah.
firm is able to direct and say, is variable at all approachable?
Mm-hmm.
Is indexed? That's
Yeah.
probably going to be the majority of cases that we
And
do.
you got home insurance. You got property insurance, medical insurance,
let's finish
life
on
insurance.
the whole life and the universal life.
Sure.
Those are maybe meant for more guarantees. Those are meant for legacy planning,
Legacy.
estate
Okay.
planning. Those are for older people that don't necessarily need any cash
Yeah.
coming from the policies anymore.
Okay.
You just want to put a premium in, know that your family is going to get it because you're building out some type of a living trust or something
Some
else.
sort of generational wealth. And that's what we do with our more high net worth clients
Sure.
here.
There's irrevocable life insurance trust. If you really get into the upper echelon
And
of
irrevocable, what is that?
wealth, it means you can't revoke it.
Whoa. And what does revoke mean
That
then?
you can
Take away.
Yeah.
Stop.
So it's just
So why would you do
there are
irrevocable?
Vessels, there are vessels. I mean, if you really want to know.
I come kind of fascinated now.
3:15. This is what my original time is. I'm gonna snooze it.
Come on,
I'm
cheers.
not, I'm not gonna.
Cheers. No, I've got a
I'm
lot
only-
of good questions.
only gonna
I've got a lot of good questions. Don't worry.
You would do an irrevocable. You do an irrevocable trust because if you do that,
Mhm.
you're putting the policy outside of your estate. So it no longer eats into the lifetime exclusion you get from
Oh, that's
passing money
smart.
off to other people.
That's so smart, though. So your people could be
We
paying.
work with estate attorneys to
Yeah.
facilitate how does that work with your investment accounts? How does it work with your life
Yeah.
insurance policy, your real estate? And it's all cohesive, right?
Mhm.
You can be saving up till you're, 100 years old. And if you don't have some of these things in place, then the government is just going to come in and take a whole bunch of your money.
Yeah.
And you're not going to see the full benefit as the beneficiaries.
And
there are very easy ways to take care of this. You just have to be proactive about it.
And I've been putting money in my investment accounts since the age of 22.
Which was yesterday?
And I don't need that taken away when I die.
I don't think the government's going to come after you.
You got home insurance. You got life insurance. You got pet insurance. Just ask Steve. You got renter's insurance, which I have.
Mm-hmm.
You've got property insurance. And that
mostly the same as home insurance.
And I went,
close.
Okay, is it? Because I went down a whole rabbit hole thinking about property insurance. I'm like,
we saw the fires that impacted, local communities here, right?
Yeah.
We saw, whether it was the Palisades or Altadena, mostly.
Yeah.
People had homeowners insurance and they're going to be, hopefully they had it and they're going to be able to get some type of a claim out of it.
Yeah.
Right? If they didn't have anything, they're up Schitt's Creek, right?
Okay.
We're hopeful that some of the outcomes alleviate some of the pressure of them having to completely rebuild, not on a physical sense, on a financial sense. So having homeowners insurance, renters, auto, all that stuff, it's important.
So people could lose their house, they could lose their car, they could lose so many their life, right?
You can lose your income.
You could lose your income from what?
Disability.
I didn't even write that one down, but I've heard of it. I've heard of it.
We don't do that much of it. I mean, I don't have disability insurance. Reason being is because I'm pretty sure I would have to be like a potato to not be able to do my job, right?
But if you're, I wasn't going to say that.
If you're in more like labor intensive jobs and you use your hands, like surgeons, for example, you have to be able to operate on people.
Yeah.
Okay. If you're not able to do that anymore, where does your income come from?
And I used to dance on the side of the road promoting haircuts. So like
the little sandwich.
Sandwich exactly. If I couldn't stand up and dance.
Yes. We would hope that you would graduate, which you have, into this stellar role. You want to have some type of insurance to protect your income. So you're protecting your health, your income, your life, your loved ones, your car. Like there's a whole bunch of different things. And I don't think we have enough time in any podcast to really go through all of it.
It is important to talk about. I mean, we've been dealing with mass devastation, and this is one of the few times I'll actually be serious on this podcast, but LA is going through a lot, not only right now, but I mean months ago. And I'm sure you had to deal with a lot of different people, like a lot of our clients,
right?
A lot of members of our family that are running this company lost that.
Friends lost their homes. It's a situation over
there.
So I don't know. It's a tough one. And I think when you realize just how impactful having certain protections in place, otherwise you're just self-insuring. And what that means is you don't have any insurances. You're just taking money out of your bank account, out of your investments to cover any potential loss.
So
some people do it that way.
Like your emergency fund. That's basically your first line of insurance.
Correct. And here's the other thing. Like if you want to go into very granular insurance, for me, if anything is replaceable for less than like $5,000, why buy the insurance on it? Like that phone insurance you have that's costing you whatever it is, and you can just go out and buy a new phone. Just buy the new phone. There are so many insurances that you can get sold on that are just kind of garbage that you just don't really need. Right? If you want to insure against things that are without a doubt something you can't afford to replace, right? It's a tragedy to your finances. But if it's something that's just a little bit here and there, different like travel insurances, like, oh, do you want to protect your flight from some weird thing, pay an extra $40?
Yeah.
Why? Like those things start to add up a whole bunch.
Yeah.
Yes.
Travel insurance.
Sometimes it bites you, right? That's the whole point. Eventually you're going to run into that thing like, oh, I wish I would have had it. Now I have to spend an extra $800 to get to Cabo and back.
So you're telling me as the director of insurance for a wealth management firm, a lot of insurance is actually bullshit?
There's a lot of bullshit insurance out there.
Yeah. Really? Well, I mean, there's term, there's whole, but like it seems like term and whole have a whole different.
I think that's what separates us, right? Like GK, we are not an insurance shop. We are an asset management company. We are financial planners, right? If we're going through that lens and looking at somebody's, financial profile, what goals they have, what their assets are, their liabilities and all that, we're looking at it in the lens of how do we make sure they're covering all their bases,
Mhm.
getting to their goals?
Yeah, okay.
It's holistic planning, right? A lot of other companies out there, they don't give a shit about any of it. They say, go out something because it's a very high commission business.
Really?
If you really want to get into the weeds, it makes a
So
lot.
insurance is corrupt.
Insurance makes a lot of money.
Okay.
Basically,
And that's a lot of
any
people
money that
told
you're
me.
putting in there for premium sake, the agent on record or whoever sold that is probably going to make a decent chunk of money on it.
Okay.
And there are a million times over where we'll get clients here who went to a handful of other, I'm not going to call them competitors. I'm going to call them insurance companies who are locally based, who were offered something and the client, because they didn't know any better, they signed up for it,
Yeah,
right?
man.
And, now they're in some big hole and we find out, oh, they're spending 30 grand a year on some insurance policy that they were never going to use anyways, right? We can't think about it that way.
It's okay, because that's what I was wondering, is I see all these financial advisory firms and all of their advisors are also selling insurance. But then I come here, we've got over 30 advisors, but only one director of insurance.
Well, that's just kind of how we set it up. Like, I still help the other advisors.
Well, I know you help all the, I'm saying if one
I've got a lot
person,
on my plate.
one person is running an insurance, and I guess two, right? Veronica's here too. So we've got
Great. Yeah.
a team of two that's supporting 35, I don't know, over 30 advisors.
Mhm.
And then I have, talked to people at other firms, and even these financial advisors are like doing all this, I don't know, insurance stuff. They're always talking about insurance. And I'm like,
We want to make sure that the important pieces of insurance are taken care of. Right?
okay.
If we look at our entire client base and we say, all right, we have a mom and a dad, they have a couple kids, they have, high incomes. We want to make sure that at a minimum, term insurance is recommended and taken because
Mhm.
that's going to help their situation.
Okay.
Last thing I want in my conscience is one of my clients dying and they don't have insurance. It's even
Yeah.
worse for me because I
I know.
run this program.
I almost laughed, but it's not funny. That's
It's
real
not-
shit.
You know
Yeah.
what?
It's real shit.
It's a fear that everybody in this office has that they're going to
Mhm.
be the one who failed to do something. And then
Yeah.
you feel bad. But the only good thing about it is it becomes a learning. It's a learning
True.
point for them
Yeah.
to not let it happen again. Right.
Damn.
So we want to make sure that people are covered at the base level to make sure their families are going to be okay.
Yeah.
Anything beyond that, health insurance you got to have, right?
Mhm.
Car insurance you got to have. But when it comes to like the whole life, universal, VUL, annuities, long-term care, disability, some of the other fringe stuff,
Yeah.
you have to look at that on a case-by-case basis to see, is it even appropriate for that person? And it only becomes appropriate once all the other things are taken care of.
401k.
All that. 401k.
Matched.
Yeah.
Roth is done. Even a 529, right? If I was older, that would probably come before whole life insurance, or I don't know.
Second snooze.
But here's the thing is, like, I'm sitting here wondering, because it seems like this is a no nonsense type of thing, the way our company handles insurance. But would other people say, hey, you should probably be allocating more than 10% of your money toward different types of insurance?
Yeah, well, we're at a, we're on a rock and a hard place.
Okay.
We're not going to agree for more than 10% of gross income into insurance.
But would other firms try to tell you that that's...
Oh, yeah. They do it all the time. It gets a little gross when it comes to some of the recommendations we've seen about that kind of
Really?
thing. So, I mean, a few $100s a month. Okay, I get it. Big deal. It can happen. We're
Mhm.
talking people who are putting in, thousands per month.
No.
Like 20, 30% of their income into these type of, products.
And they're told that's what? Like financial planning, like...
Yeah. They're saying it like it's the end all be all. This is what's going to make your life really hum, right? They're going to say, you do this, that means your kids are taken care of for college. Your retirement's taken care of. Your vacation home is taken care of. It's a down payment on your next home. They're going to say a lot of those things.
Mhm.
And if you're unaware, if you're a potential client or prospect going into one of these companies, you are hoping that the person on the other end of the desk is competent and they're looking after your best interest, right?
However,
I
learned about this word fiduciary, right?
Fiduciary rules.
I learned about this word
come in.
fiduciary.
Like you you're so unaware. And I think it's just a big education problem
Yeah.
is what it is. Like people don't know what it is. People get sold.
Yeah.
And when you look up insurance, life insurance, whatever, if you Google it,
Yeah.
you're going to find a lot of bad stuff, right?
Mhm.
Top list of, oh, this is a scam. Oh, I never should have done this. Honestly, a lot of it is they never should have signed up in the first place because they had no idea what they were signing up for.
Like credit cards too.
Sure. Like you look
We
at-
learned
you-
that,
you-
swimmers,
you look
we
at a lot
learned
of
that.
right? I think if you're educated enough, make well-rounded decisions, know what you're getting into,
Mhm.
make sure it fits within the rest of your plan,
Yeah.
then you're setting yourself up for success.
Yep. And that's the thing. Listen to me, audience out there, all my swimmers out there, we're going to be better, okay? We're not falling for another Ponzi scheme, bullshit credit card, insurance 30, 50% of my gross income. I don't even have a kid. And if I did have a kid, I'd be getting them a 529, not some whole life, term permanent bullshit, like whatever. That's not what we're doing. We're staying for the real. We're preparing for our future. And we know a big word from some of our first episodes, fiduciary, right?
I have one last question before
Yes,
you
sir.
have to close it out.
Go ahead.
Oh my God, I have so much more questions.
At what point does a umbrella policy make sense?
So umbrella policies, I think I have one.
Mm-hmm.
And what it effectively does is in order to get let's start with what an umbrella policy is.
Okay, yeah.
An umbrella policy will take care of a certain dollar amount. Let's say it's $1 million or $2 million, that it shields you from certain damages, lawsuits, whatever, after you've already exhausted your car insurance, for example. Like if you get into an accident and if you let's say you
hit a person.
let's say you hit let's be better. Let's say you go into a parking garage
Kind of grim.
in Beverly Hills and you hit 10 Ferraris.
Okay.
A lot of damage, right? Your car insurance policy is probably not going to cover all that, right?
Mm-hmm. Yeah,
The
Probably not.
umbrella policy is what layers on top of that to cover any excess damages.
Oh,
So it'd be
that's
like-
so smart. I
They're
feel like we
normally-
should bring up a graphic, but I don't
They're
have one.
normally pretty, graphic it later.
Yeah.
We can probably build one.
Can we
out
ask Chayton
later
to
on.
have a car go in
Chayton?
and hit a bunch of Ferraris?
Just make sure it has like an actual umbrella. Rihanna can be on
Me,
there.
can I be driving?
So, what the umbrella policy does to be underwritten is it's going to force you to actually get a legitimate car insurance policy.
Okay.
Like for car insurance, you can just get the bare bones policy that's mandated by the state of California,
Mhm.
and boom, you're okay. That means you don't have certain protections, your limits are low. Probably not exactly the best car insurance policy, which I know you don't have a car, but once you do, you're going
And we're
to get
getting
one.
there.
The umbrella insurance.
Swim with me.
It forces you to get the better.
There's
The better
that's the thing.
protections
That's
on
why
your car
insurance is corrupt.
So
though.
they won't cover you until they've looked at your other policies?
They're going to look
They-
at your car insurance to see, are you covering an appropriate amount to limit their exposure?
appropriate amount though, because they always have a leg up on
I'd
it.
have to go back and look, but I think it's like 500,000 per accident on damage. I think it's 250 per person,
Mhm.
medical damages. They want to make sure you have the appropriate ratios and all of it in order for that $1 million or $2 million or $3 million
Okay.
to kick in. The benefit is that for $1 million on a umbrella policy is like $150 a year.
Okay.
So
I could do that.
I have
year?
one a year.
Oh, wow.
They're normally very cheap.
Okay.
And if you're in where we live, probably a better use of it than out in the middle of nowhere.
Mhm.
Just because how much damage can you really do living in certain parts of the country, right?
Yeah.
So
Northern
maybe
Michigan, yeah.
maybe your regular car insurance and all that can handle it. But I don't know when I'm going down the street and I hit something or a car or a building or whatever, there could be a ton of damage. And I just don't want that personally coming to me, because if you don't have it, once you exhaust your car insurance, they're going to go after you, the person, and go after your assets, your retirement accounts.
So that's you said something about a lawsuit earlier, which is that like a different type of insurance for if someone sues you or
Nah, I mean, not really. You don't have like lawsuit insurance per se.
But the umbrella policy would cover
But the
that.
umbrella policy would cover you when you get sued because you ran somebody over and your car insurance doesn't cover the whole bill.
okay.
These are the things that when it happens,
Wow,
And
umbrella.
You're really thankful
And
you
you're
have it.
covered.
Yeah,
Yeah.
you're thankful for Bryan Miranda, by the way.
It's so interesting that there's not like classes about this. I mean, we say this all
I
the
know.
time.
Nobody knows about.
I've
nobody
been
knows about
asking
taxes.
financial advisors for 15 episodes.
Everybody wants to talk about, what should
Yeah.
we learn in high school and college and all that. Like, they're not going to
Yeah.
teach this. They're not teaching
Apparently not.
taxes.
And that's they're
I
I
trying to
think it'd
keep
be a
us
much better
down.
use, like to have like a personal finance type of a
Knowledge
course.
is power, right?
Like learning from I'm going to try and instill as much information as I can for my kid.
Yeah.
Right. But that's different. That's
JJ.
That's one person.
Yeah.
People don't have access to this type
I know.
of
And if you're a
information.
parent out there and you've got a young child,
guess
go
I
tell
should
them
say-
about insurance.
I
Go
should say subscribe to his thing, right?
listen to the
Yeah,
Thank
listen
you.
to this.
Look at that camera.
I hope. Where is it? That one?
That one. That one.
I think it's that one.
That's your camera.
That's your
That one.
camera.
This is
You should subscribe to whatever information he's got. I hope there's a few nuggets of wisdom here.
Look, go and if you're a parent, go to your kid. Look, do you want to send them the Chasing Finance podcast? Obviously, but first, just go tell them, hey, this is insurance.
I
Hey,
actually think it's
this
the
is-
exact reverse. Want to know why?
Tell me.
I would imagine the majority of your listeners are of the younger demographic.
I know that's true.
I think you should pose to your listeners. They need to have an honest and open conversation with their parents,
Go talk to your
their
parents,
grandparents.
Interesting.
To say, what the are you doing?
So you're telling me that people over 40 don't even know about this stuff?
A lot don't. Or they think they do, and it's just like set up incorrectly.
What?
There's things that are wrong. And I
Okay.
think the worst thing you can do, and I see it just too often, is once you set up a plan, you don't revisit the plan.
Huh.
You think that, I set this up 10 years ago. It's got to be good. It's got to still be great because that's what somebody told me.
Yeah.
You have to run, when it comes to insurance, there's something called an in-force illustration. And you
Mhm.
want to be able to take a look at that because that's going to show what the health of the policy is going to be.
I'm going to write that down.
And-
In-force illustration. Alex, will you bring that up?
Assuming you've got multi-decades to deal with, you can fix these things. It doesn't mean that policies are not salvageable. Like I've had clients personally where we look at them like, it's a little light. We need to put an extra $50 a month,
Okay.
right?
That's
And
doable.
it gets back in track. It makes it last lifetime, all of that, right? Or we reduce the benefit. We make changes. With everything else, there are changes that need to be made
yeah.
along the way for it to stay good.
Okay. And
It's
it's
the
like
people who-
investing's the same way because you're also a financial advisor,
Same
right?
thing. You
Trim
just
a
have to-
portfolio,
you
huh?
have to keep on looking at this. You keep
Yeah.
track of it with anything else. It's when you think something's good, you never take a look at it again, and it winds up biting you.
Yep. And
It
that's-
was preventable. And I think that's the takeaway if you're talking to your listener
yeah.
or listeners.
Swimmers, fishers, we call them
Probably
whatever.
just swimmer,
Yeah.
singular. One
Swimmers.
person listening to this.
I had a couple swimmers out there.
They need to just say, hey,
yeah.
mom, dad,
Dad.
whoever, when's the last time you took a look at this?
Hmm.
And they're going to say, it's fine. We set it up. We're good.
Yeah.
I hear it too often. The worst words for me are, I think they're all set. They're
that
never-
old bag of bones doesn't
they're
know what's
never
going on.
set.
Yeah.
you had a
What's the harm? Take a look at this stuff. Go under the hood. See what it really is.
Call up your local Bryan Miranda and ask some questions. Because, guess what? Chances are, whoever you're working with out there signed you up and never took a look at it ever again. And guess what?
Alex, it sounded like you had one more question.
I was just gonna say, 154 people watched the last episode. It's kind of a lot.
It's good.
I feel like that's
Does that mean I can put the shades back on?
at least
I will wrap it up.
208 parents. No, 308.
308 parents?
Sure, why not?
Let's go.
Here.
All right. Well,
Don't-
I've actually
don't
got a
lose
lot
those.
more questions.
Those were
I like these.
those were a gift.
I'll give you $100 for them.
I officiated a wedding, and that was my gift.
Really?
Hey, Luke and Jenny.
And shout out to Luke and Jenny too, because
Where's your rapid fire questions?
All
I
right.
assume we're getting to these.
I got
right?
buzzwords, right? And I do have a lot more questions, but we clearly do not have time for those questions.
hit the
but I
rapid
do
fire.
want to hit the buzzwords because I already feel like I have
We
learned
need
a
the
lot.
Chappelle wrap it up.
All right.
The rapid
Cash-
fire is
Do
usually
we
pretty
have a
good.
wrap
All
it
right,
up
all right.
button?
I usually just tell them to wrap it up.
All right, wrap it up.
But
What is okay? I've
Do
got
the
it.
rapid fire and then wrap it up.
All right, cash value, IUL, claim, risk factor, deductible, fixed terms, writer, life insurance trust, beneficiary. How do employee-sponsored plans work?
It's all word salad to me. What do you
Father's
get
insurance
to-
versus mother's
what are you doing here?
insurance. Can you insure AI? Suicide clause.
You can't insure
Whole
AI. You can
index.
insure yourself from AI.
Can you
other
write off
crypto.
insurance?
Certain employer plans you can.
Okay, let's get into it. So what is an employer plan?
Let's say you have a disability plan sponsored by by your company. You can have them set up where premiums are deductible. It does come with some back-end taxation for benefits, but you probably don't need to go that dense. For the
So
purposes
Ross
of
could
your
insure
podcast.
me a disability plan if I ever go bald.
No.
Damn.
You're
Okay.
never going to go bald. Look at that hair.
Hey,
Speaking of somebody, I think we got pretty good hair.
we
did. You know.
hair, man.
We have some people in this office who don't necessarily
Someone
have the good
finally
hair.
on this podcast has got beautiful head of hair.
Yeah.
Woo.
I feel bad for some of the younger guys in the office.
I
with the
know.
hair.
I
Whatever.
know. We
They're
could start
lost.
chirping people's hairlines, but we look around here. These three fellas got some beautiful locks of hair. We're not quite got the blonde like Alex, but
Are we the only ones that any kind of like facial, anything here?
Is it? I mean, I always have it.
Think of
Alex
who
has got
else-
a good beard.
Who else in this office?
Some fellas on the
Good que-
tag
does
team.
Dan?
Samson's got a good beard, I think.
Does Dan have a beard sometimes?
Off and on.
Off and on.
Samson's got a good one. Chayton grew that mustache that time. That was pretty funny. Remember that?
No.
That was a good, couple weeks.
Yeah, I don't know many people.
Okay, back to your question. We're not insuring
Let's think about
against
everyone
your,
that doesn't have a beard,
we're not
and then we'll
insuring
find
against
people
your
that do have
baldness,
beards.
Okay.
I know, and that's the thing. I just started growing mine because no one here had one. Okay, employee-sponsored plan. So if I want to get an insurance plan through GK, that's a realistic thing that
You're
could
not
happen.
going to be getting an insurance. Basically, the owner of the company, the employer, is going to decide on what suite of benefits they're going to offer to its employees, right?
Yeah.
Normally, it's a pretty basic term life policy. There's normally a health insurance. It's mandated. Right?
And that's another thing. I have to start paying for my own health insurance in like a year or two.
oh no.
I know. How much do I spend on that?
Actually, this is a good point. If
Tell
you
me.
have this unresolved health insurance premium that you're going to have to start coming up with in a year, you have to build that into your savings right now. Because if you set up some like IUL or some fixed plan without accounting for this upcoming
I'm
bill,
already poor.
now you don't have enough money anymore.
I don't have any money.
So don't
I had $3,000 in my bank account.
today.
No, a couple weeks, like 2 months ago.
Oh, no, you don't. Now it's
and
now
now it's
gone.
bye-bye.
Pull the mic closer to yourself, Chase.
And now it's bye-bye. Anyways, though. So, okay. So I need to start saving
It
for...
goes back to the basics. As long as you can be overall successful with your own microfinances, right?
Mhm.
You have a little bit going into these multiple buckets. You have your 401k handled. You have your liquidity handled because your bank's okay. Your high yield savings account's okay. Your individual investment account is okay. Those are the priorities, right? If you feel confident with that,
Yeah.
if you'll feel confident in an emergency, you can afford a crazy bill, then great.
We're going to get it together.
If not,
Yeah.
then you don't have any business doing some of these
Okay.
other things.
Okay.
Not yet.
Okay.
Don't worry. You're young. You can handle it.
I'll
You're
figure it out.
fine.
That's the thing. Like, and that's the thing. I'm young, and a lot of the people out here listening are in the
What's today?
same position
Today's
as me.
June 11th.
June
11th.
10th.
It's
yeah.
not Juneteenth. That's next week.
June 19th
It's,
is right.
It's June 11th.
Okay.
Yesterday was my 8-year wedding anniversary.
Congratulations,
So
by the way, to you
that's
and
why it's
Nicole.
just
By the
kind of
way,
very top of mind here.
does Nicole know you're on the show today?
No, she'll find out once it airs.
Nice
She
watch
will be
party.
one of 100 and maybe 55.
Yeah,
viewers.
that'd be great.
Let's go.
I'm not going to call her a swimmer, though. She's not going to be one of
Yeah,
the swimmers.
that's-
It seems a little weird.
Alex made
But
it.
let's do
up.
this.
And what's the name of, like, you know how podcasts have a name for like their followers?
Well, I feel like Finding Finance kind of reminds me of like Finding Nemo. Could
Oh, my
name
little
them your
swimmers.
fishes.
My little swimmers.
Oh,
Wasn't even supposed to be a joke. I didn't mean it like that. All my little swimmers out there.
June 11th, 2026.
Okay,
Let's get on another one of these little chats.
I like that.
And I want to see a health report of your finances.
Well, then you got to know what he's at now.
So you promised.
Do a little benchmark to see
You
where he's at
promised.
now.
You
Can we get a little benchmark of where you're at?
promised.
This is a good thing to do, Chase.
Ah.
To end it. End it with
Come
the.
on. Let's just give like what's the update here?
This is how we typically for every episode we've been bad about it recently, but he's supposed to give an update of his net worth,
Bro,
what's
come on.
what's
You
on his
said-
credit cards.
I think
what's-
that's great for accountability.
yeah.
All right.
So
If you're
let's
up, then we
What do you
want to
want-
know about it so we can help you.
What do you want
It's
me to
a
look
help
at,
me
dude?
help you situation.
let's calculate the net worth.
Well, I do have a new credit card, so
Just you can do rough numbers.
we're not
but
doing. Okay, wait.
rough. You don't have to go into every account.
Don't
but-
make me go in my investment account.
But you should look at them enough to know roughly what's in them,
I
so we
haven't
can
looked at them
calculate
in
the
a
net
while,
worth.
to be honest. All right, I'll just go bank account minus credit card. But that's the
What's
thing
it-
is, I'm getting paid on Friday, so it's different. Can we count that? Because I had $2K.
You can get a payday loan. Get paid today.
I got $2K coming in 2 days, and that's like okay. So my checking's $223, my savings $3,200, so that's $3,450, and then my new credit card is $550, so that already takes me down to $2,900, right?
You should pay that off.
Well, the problem is my old credit card's $1,500,
You should pay that off too.
so
So where does that leave you?
$2,900 with $1,500 is $1,400. But here's the good news is that I get paid $2,000 in 2 days. So really, I'm looking at like I
And
still
then
might have.
what do you
around
got planned
$3,000.
this weekend?
I know.
Where are you going?
What am I doing this weekend?
I don't know. You're going to spend it.
I know that's the fucking point. And that's the thing is I have to book all these tickets. I got to go to Austin. Now my tall girlfriend wants me to go to Oregon for the 4th of July.
Where's your short
but
girlfriend going?
But I really want to see the love of my life and go to Walloon Lake with her. So I'm like, which one am I going to have to fly to?
As opposed to Walden Pond.
What's Walden Pond?
They don't teach anything at LMU, do they?
I don't know. Dude. What's
So what's in your
What's Walden Pond?
What's in your 401k? What's in your other
I
stuff?
don't want to do all this.
Don't look it up. Don't look it up. Just tell us.
I don't know. $20,000, I say.
Just estimate.
You have 20 in your 401k?
No,
That's not bad.
No. I've got like less in my 401k. I've got like probably $5,000 in my 401k. Oh, you know what it
We were
is?
Slightly off.
No. What it is it's my which I don't
No,
talk
you can't
about.
bring up the.
$2,000. No, probably like $3,000 or $4,000 in my 401k, and then I would say another like 5 to 7 in my Roth, plural.
What about your brokerage account?
And my brokerage is probably another 2. So I would say I think my like actual stocks are about like $2,000 or $20,000 worth of like.
I think we need Chayton to make an actual graphic
Yeah.
of this with like bar charts and little caricatures going up. You know,
Yeah.
hopefully like the lines like this direction.
Because he was at 25 grand like not that long ago.
I know, but that's the thing. That's what I was kind of citing it back to. But then here's the thing.
So we got a year, right, till we revisit
Yeah.
this.
Okay.
So I would love to revisit
So
this.
you'll be
in a
back on the
year.
show 1 year from now.
Yes, and give
June
me back
11th,
my glasses that
2026.
You can't afford for $100.
They're sick though. I think $100. What if I pay $100 for him next year? Dang, he looks good.
So what's your goal for a year from now? What do you want? You're at, let's call it 20 grand net worth now. What are you going to be at?
40
in a year?
grand, obviously.
You're going to double it.
So you want to be at 40 in a year from now. Okay.
Bro.
Let's use that as a goal.
Yeah.
Why not?
I mean,
if you stay on track.
think
for all
about
those
me. I
different
might be
things.
here on advisor in a tie, shorter hair. We don't even know what I could be capable a year from now. I could put out my new album, bro. Like, we could skyrocket.
I think we all know what he's capable and incapable of at this point.
Exactly. So,
Hopped any
white rapper,
fences?
financial advisor. I mean, the jury's still out, really, what we could actually do.
Hopped any fences lately?
I actually never hopped a fence in my entire life, so I've tried to hop a few, though.
Don't go chasing waterfalls.
And you
Ooh,
can
that's
never
got
get
like
over that
games in
hump.
there, you know?
Punny,
do another one of those.
punny.
How many
I
of
like
those?
that. I like that. I like that.
All right, time to close it out, Chase.
But
Wrap
dude,
it
what are
up.
fixed terms though?
What are fixed terms?
Yeah, no one told me what fixed terms were.
All right. Let's say you have a 20-year term. We're talking about life insurance.
20-year term
20-year
policy.
term policy
Mhm.
for $1 million, and it costs you $50 a month.
Okay.
Okay. That means it's costing you $600 a year for
Mhm.
20 straight years. If you die prior to that 20th year,
Mhm.
then your beneficiaries get the $1 million. Okay. If you
However-
outlive that 20,
Mhm.
then you have a decision to make. You either just cancel out the policy because it expires or whatever, or what more likely happens is the insurance carrier will say you can continue on your $1 million policy in year number
Ooh.
21,
Okay.
but instead of $50 a month, now it's $100 a month. The year after that, now it's $200 a month. The year after that, it's $500 a month.
You get taxed.
It gets exorbitantly expensive. And the only time I ever see people actually continue on terms after their expiration date or their term guarantee end is, unfortunately,
they're sick.
They are like terminal. They're sick.
Yeah.
They're uninsurable. Something's going to happen.
And you know what?
Down the road.
Yeah.
And they're forced to pay the higher premium because they can't get new coverage elsewhere. They can't renew it. They can't get underwritten anywhere. So, now it's a trade-off. Now I spend, instead of $600 a year, now I spend $10,000 a year.
Yeah.
Knowing that if I kick the bucket, that $1 million is still going to go to my family.
So do people ever like get that and then they don't pay that extra tax, right? Like I'm sure that must be really expensive and hard to do for like maybe some people are older, they don't have a lot saved.
All the time. And
then they're just done.
And they're done. And then the policy cancels and then the family doesn't get anything anyways.
Wow.
Yeah, they're like, again, it comes to planning. Like,
How
can set these
unfortunate
up.
if you're that close and your policy runs out and then you can't afford to keep it going.
I found out that, this is a personal story, I found out that my grandfather had a policy through New York Life that he was paying into for the last, 25 years or so. I think it was probably 65 when he retired, and he got the policy, paying in money. Come to find out, and this is because I wasn't really involved in it, which I probably should have intervened. When he hit he lived to 96. Long life. It was great. It was awesome. At 90, the policy just expired. There was no opportunity to pay more, keep it going, anything like that. So when I'm like, why is this still not charging the family kind of bank account, right? What's going on here? So I called him up like, oh yeah, this ended. There was no conversion opportunity. There was no, putting this into a different type of a policy, no extension, nothing. And New York Life got 25 years worth of premiums, which were more than what the actual policy benefit was anyways.
Dang. Corruption.
So there are ways that you lose on insurance.
Yeah. It sounds like you're more likely to lose. It's almost like, I wouldn't
call it that. I wouldn't say that.
They have to make money to be a business though, right?
Insurance carriers in general are hoping that you just quit your plan.
Betting
and
against you.
Stop. Most term policies, I think there's a stat. I think it's 7 years. After 7 years, people just cancel them for whatever reason. They just stop them. And then what happens? All the money goes to the insurance carrier. Insurance carrier is now off the hook completely on paying any claims.
Wow.
Right? If you're able to be smart and be consistent and stick to a plan, you gain control of the situation and there's less likelihood that the insurance carrier is going to win. But right now, you got to think about it in, the most easiest of terms. People are not smart with their money.
Yeah, I'm not.
We'll wait a year from now and see if we can get just a little bit.
We're working on it.
We're working.
Keep the bar low, though. Keep the bar low.
Yeah.
Everybody.
So, if we're looking, the long story short and all that, this is a very complicated business. There are many. My last snooze. This is a very complicated business. There are many types of insurances. Some life, health, auto, property.
And property
renters,
can be anything, though.
Disability, long-term care. We didn't get into long-term care. That's probably the most important one. Somehow we don't even get to that.
Because Ziad told me his hook shot was insured.
No, it's not. You need to just talk to somebody who knows what questions to ask. And you don't need to be an expert in this either. You just need to be curious enough about what you've set up for yourself to start diving into where is this going to go wrong for me?
Okay.
Did I set it up correctly? Are there things I can fix?
Sure.
We have, like I said earlier, I've got clients of mine who will occasionally tweak the plan every few years to make it still line up to have a good outcome.
And in
if
this
you
case,
don't do that along the way, then you're just having a problem fester for too long.
Okay. And in this case, is it good to be tweaking? It sounds like a tweaker is usually a bad thing, but in this case,
as opposed to a twerker.
Yeah, which that's always a good thing.
Any of your swimmers,
unless Brian's the one twerking.
Yeah, you're not paying me enough for that one. It's good to tweak. It's good to evaluate with anything else, right? If you have a car, are you just gonna let the car just go?
I'm from Detroit. You
No,
know, we were always
yeah.
working on the engine.
You
or
rotate
whatever.
your tires.
Rotate
you
your
get
tires.
oil changes. You do all these things
Yeah.
to maintain everything in your life, your house, your car. Why not your finances? Why not your insurance policy?
I'm a beard guy now. I'm going to trim this thing up, make sure it looks good all the time.
Okay, you do that.
You know what I mean?
Please maintain your finances as much as you maintain your hair situation.
I know. And that's the thing. I need a cut, low key. But I'm bringing back the corporate mullet. Just wait. Anyways, we got to get you out of here. There's a few more things I did want to ask about. And I think
Go ahead.
well, first of all, it just feels like we've talked about so much. We could look at all these questions I've got left. Like, we're here on the outline. Like, we could keep going all the way
Thankfully,
down there.
June 11th, 2026 is right around the corner.
What I'm
I
saying,
can address the rest
what
of your
I'm saying is
questions then.
this.
Let me see a question. Let me pick
All right,
a question.
all right. You look.
I'm going
at
to
me.
pick what I feel is like a
We're
valid
They're
question
like, so
here.
am I. This is toward that amount.
Okay.
I think it goes all the way down there. Like,
Yeah.
it's just like, what is insurance? And this is a good time to talk about sugar-free Red Bull. If you see him over there, he's actually drinking these from our sponsor, Carly.
I think the part in here that would be helpful for your viewers,
Swimmers, yeah.
swimmer, is going back to the parent thing. Because
Okay.
you have in here a few different times of like, oh, well, there's a life insurance trust, there's living trust, there's living will, there's probate, there's like all these different things, right? I think having a, throw it all out there on the table, what's set up, have a conversation with your parents, their advisor, their estate attorney, especially, to see like what's going to happen. Right?
It's a good question. Yeah.
Like, what if?
I've never really talked to my parents. I mean, they always just say, we have it handled, we have it covered. I've never really tried to get specific.
Let's start with you.
Yeah.
Be the person you want to be, or whatever that phrase is.
No, Kyle's been telling me if I want more people to respect me, first I have to respect myself more.
I think you should respect yourself more.
Yeah. And that's what people are saying.
I think that you should. So let's not worry about next June. Okay. That's for you.
Yeah.
I think there should be a little bit of a follow up here to see, like, were you able to get your family in tow?
Okay.
Do they have things set up? Do you feel that they do have everything? As you don't want it to be we got it set up, and then you come to find out, it wasn't set up.
Who's taking care of my beach club membership? You know what I mean? I need to know. I need to go know that we can still go to the beach club even if mommy and daddy go bye-bye.
You should interview some of your own family with some of these type of questions.
Yeah, no, I should.
And say, hey, this was brought up. Are some of these things handled? How did you do it? What did you find that was successful? Did you see anything that was terrible for this situation before? Once you start asking those questions, I think it eventually gets to a good place, right?
Yeah.
So that you're not left wondering, like, what is going to happen when that time comes. You're a lot younger than I am, but I have these conversations with family members of mine. I kind of know where things are, maybe to a fault, but you take some of the uncertainty out of the equation because there are so many other things, how the investments are going to do, how the policies are going to perform. But you can have a conversation about all this stuff and know some of the defined portions. Like, do you have a trust set up? Do you have a will?
What are the simple questions we should ask? Do you have a trust? Do you have a will?
You should ask.
Do you have a whole life insurance?
Either. You should ask anybody out there. You should ask your parents. Do you have a trust or a will set up, or neither? A trust and a will are not the same thing.
Yeah, we learned that on Nico's episode.
You should very much ask that question. That alone will start to feed into other questions that need to be asked. And then you start getting into the estate attorney situation. How do we make this all work? How are assets passed down?
Should my lawyer be involved when I'm talking to my parents?
I don't think you have a lawyer.
I got Scott and I got Uncle Bryan. So
okay. Are they estate lawyers?
Well, Scott's actually his friend, so I call him Scooter mostly.
Is Scooter an estate?
No, he works for Jones Day. He's like a big business lawyer. Okay. Although one of my best friends is an estate. He just is taking his bar in like a couple of weeks.
That's Joan.
My buddy Tommy.
Tommy.
Find an estate.
And my buddy Tommy's also a lawyer too, but go on.
Find an estate attorney.
Okay.
Your parents' estate attorney, a referral. We have a whole bunch of them.
Okay.
Yeah, you might want to include that kind of a person into a conversation eventually. Not the first call. You talk to your parents first. Figure out like
should I call my parents and be like, hey, like me and my lawyers want to talk to you?
Nah, it's probably a bad route. You probably want to go the reverse. Say, well, it might be a good idea to have this checked out.
Okay.
And then from there, then it becomes, oh, here's your trust or here's your will or this is what's needed. And then, maybe there's going to be some tax liability down the road, or maybe the inheritance is going to be weird, or maybe beneficiaries need to be set up correctly.
Okay.
And then it says, oh, well, you don't have any insurance, so maybe throw that in there too.
Mm-hmm. You hear that, Gam Gam? I'm coming. I might secession the whole operation. Me and my lawyers pulling up, talking about, hey, what's up with the secession plan of this basketball camp we got running in Metro Detroit?
Gam.
Who's getting the place in Clarkston? I was trying to start my own Motown, and I thought every little boy wanted to start his own Motown, but it's just me.
Philly. Back again.
Yep. What other? Did I have any other good questions on there?
No, not a single one.
Come on. The final thoughts are the best part.
All right, close it out.
All right. Okay, wait. I do have one big question to ask, and you probably didn't even want to answer it, but every advisor brought this up to me because they hate these things so much.
Mm-hmm.
And you might know it's coming your way, you might know it's not, and I'm sorry I even have to bring up the A word around here. But after 15 episodes, we've never actually defined what is an annuity. And if there's anyone that I think at this company that could define it, they told me it was going to be you.
We couldn't get an annuity defined in 15 episodes.
I know. And I'm asking these people. I'm having partners on here running how many hundreds of millions of dollars? What's an annuity?
I guess it's time for some more training.
He's never asked about an annuity once on this entire podcast.
Let's go.
So he's embellishing a little bit.
I've brought it up. Okay. He probably edited
I'll give
it out.
You a very basic answer to kind of wrap, right?
Yeah.
Hold on. There's my fourth snooze. Now we've gone from 3:15 to 4:01. An annuity.
Okay.
It's transferring.
Jimmy, get in here.
No. Don't ruin this. This is about to be good.
Jimmy, stay out there. So, an annuity is to transfer the risk of investments. The volatility of investment, right? Market can go up and down.
And it's been a volatile year.
ETFs, mutual funds, individual stocks. They can go up and down. You're taking the risk that you as the investor are taking on that investment.
Okay.
And transferring the risk to an annuity carrier. An annuity carrier.
Which is like what?
An insurance.
Like Chase Bank?
JP Morgan kind of, but not really. It's Nationwide, Corebridge, Pac Life, Prudential, Allianz. There's a handful out there, right?
Okay.
What they do is they accept your money.
Okay.
Now, the risk of the investments going up and down, mostly, and there's a lot of different annuities out there, but we're talking about like fixed index kind of annuities. Now, the risk of the investments going up and down, it doesn't matter for you so much anymore. The insurance carrier, the annuity carrier is going to handle the risk of those funds. And what they're going to do is they're going to give you a promise or a guarantee saying that no matter what happens with those funds, they're at least going to give you a certain amount of money going forward.
Interest.
So they just take over your... That's kind of confusing to me.
I'm confused.
Let's say it's $100,000. You have it invested. It could go up and go down.
Invested in what kind of vehicle?
ETFs, mutual funds, whatever.
So like a brokerage account.
It's your brokerage account, right? You instead say, you know what? I throw my hands up. I don't want to deal with this anymore. I hate the market.
Yeah.
You can send that $100,000 to Allianz.
Mm-hmm.
They're going to say, we'll take your $100,000. We're going to go invest it ourselves.
So you're not selling the investments. You're basically transferring it to them.
You're transferring that $100K to them
in stock,
in whatever. Normally, it gets sold, it gets transferred. There's taxes, maybe.
Do they pay the tax on that?
You're going to pay the tax on it. It depends. If it's an IRA, it's still going to be an IRA at the annuity carrier. If it's non-qualified money, you have to transfer cash. So you have to sell out of assets.
So why not just like sell the stock you have if it could go down, if it's a volatile, portfolio, and just put it in something less volatile yourself?
You can absolutely do that too.
So then what?
I think it becomes more pertinent for people as they get older, because normally if you do that, when you just sell it and get it safer, you're still not solving the problem of future income. An annuity at its most basic form is a pension plan. Where now you're going to get a certain amount of money per month or per year or whatever with a reduced sense of risk on the account.
Okay. And I have to pee so bad, I can't even ask any follow-up questions because I'm so glad that Alex was
You got
asking
4
questions.
different things over here.
I did, like, the first time you explained that, I was so confused. And then Alex said he was confused, and it totally bailed me out.
I mean,
so.
if we need to do a follow-up like annuity thing, we could do
Yeah.
another one.
Yeah, maybe,
That makes sense to me now. I never understood annuities, not just mainly because I never
They're
asked.
mostly for older. Like, I don't think we do many for anybody under 45.
So it's basically like you don't want to deal with it anymore. This is just an easy way out. Here, take over my
You don't want to
stuff.
use it if you're 25 years old, typically,
Yeah.
because you
but if you're some out there,
you want the risk of the market, you need to grow your assets. But
Mhm.
once you've got to that point, now you want to protect your assets.
yeah,
And it's a whole lot easier. And you're not going to do 100%.
Mm.
Rarely. I never really see it that way.
Mhm.
But let's say you have a 60-40 portfolio, 60% in equities, 40% in fixed income. Maybe taking 10% out of that fixed income portion and putting that into annuity.
throwing the annuities,
right?
yeah.
You still have equities growing over time because they're supposed to keep pace with inflation, make sure you're never going to run out of money, all of that, right?
Mhm.
But that portion that you earmarked for the annuity, you're going to get some amount of money coming back to you in retirement. Now you have IRA money coming to you.
It's a fixed amount of
Annuity.
money you're getting.
Normally it's fixed, but there are companies out there that give you an opportunity for that to be inflation adjusted as well,
Okay.
or grow with the market.
But
too.
the company that's providing the annuity is the one that's now taking your money, investing it, and,
you have to make sure that that company is solvent, they're financially strong,
and they're probably
that
making
they're going to be around.
more off of your money because they're taking the higher risk. and
Correct.
they're making
But they've got a pool of billions
Right.
that they're dealing with the flows of the market. They use options contracts. It gets very, very dense with how they do it. But yeah, effectively, they take on the risk of the market. They deliver a return for you.
Okay. Interesting.
Well, I'm stumped, ladies and gentlemen.
Stumped. It doesn't take much to stump Chase, I found out.
I think it takes about, what, 3 hours?
2 hours and 14 seconds.
I think I was supposed to be home about 15 minutes ago.
On the money. Well, if you want me to keep going, we can keep going, but some of us have work to do. We got to get our mans out of here. Alex, are you stumped?
No, I'm on board. I understand.
Well, if we want to get another one, you let me know. Not today. We will check in on next
We've
year.
got at
though.
least got another year.
1 year.
1 year from today.
I'm hopeful that you can-
Juneteenth, 2027.
I hope you're still with us in a year.
Insurance. You know what I mean? I think I can make it.
Unemployment insurance. Not meant for that. It's not unfireable insurance.
Yeah. And what I know, and that's another thing is that I learned this week is no matter what, they tell me to go, I ain't going.
That was a semantics.
I like that.
Semantics is all that was.
Yeah.
All
Okay. Well,
Is there like a happy dance that you do?
yeah,
for
we
your-
do just
for
like
your
we close it
swimmer?
out. All right, what did we talk about today? Well, we talked about there's term, there's life insurance, there's all these different types of insurance. We learned that basically what is insurance? Well, you pay monthly, and then if you die, other people get paid a large sum of money. If you live, then some policies you get nothing. Some policies you can start paying an increased amount. What else did we learn? A lot of insurance is corrupt. You think out there that you don't need insurance just because you've got GoFundMe? You think you can break your arm and just post a GoFundMe on your Instagram story and everyone's just going to pay your way to your hospital bill? That's not real life. That's not how it works out here.
I could never be a teacher. Like half of that was semi-accurate, but
He was just saying words that he heard throughout the entire 2 hours.
Bro, the
you really like the word corrupt, by the way.
insurance is corrupt and you're the guy making it not corrupt though.
I don't know. It's all corrupt. I think
Finance is corrupt,
I think you
insurance
gotta
is
be
corrupt, but we're
smart.
the good guys. We're the good guys.
I would like to think we're the good guys.
That's
I think we put
all
our
I'm.
clients first.
Yeah.
I think there are good ways to do business. There are bad ways,
Hmm.
and I think we do a pretty swell job.
Yeah.
Making sure this actually fits.
I
in
want
the
to.
rest of the plan.
I want a movie about a superhero, and his name is Fiduciary, and he saves people's financial futures.
I would say that I learned a lot throughout this episode.
I feel like, okay. I feel like you should be over here.
Well, this is what I kind of do throughout
He's the
this.
star of the show. Everyone likes him better anyway.
Thank you for grounding this episode a little bit.
That's
like,
what
you
I-
had regular questions, and I'm dealing with this.
Yeah.
over here.
I had good ones, bro.
He picks it up along the way, but I am also learning, as a person who's not an advisor working here,
Well-
I learn a lot through like him bringing it up and then me thinking like, oh, actually I have that question too.
Well,
But
we're
I-
different demographics. You don't want to sit around talking to the poorest person in the world. And you also don't want to use examples of all our high net worth clients. So we've got Alex Bang over here asking if you're a 30-year-old that's got a good amount of money, but still has to live in LA and
I think
figure
we
out.
know what demographic your swimmers are. If you were one of the older advisors in this office or one of our older clients,
Yeah,
I think it would be a much different.
it's true.
It would be a different approach
But
because there's just different problems that the over 50-year-old five snoozes. The older 50-year-old crowd, now it's estate planning. Now it's like guarantees. Now it's mechanics.
it's
and
just part of that,
strategy.
like-
semantics.
like being here, like all I've learned is that you got to play the game that everyone else is playing that's successful, and insurance seems to be just part of that puzzle. Like you got to get all these things to protect yourself.
Yeah.
I already have like way more ease of mind than like a lot of my friends do because we're so set up financially, not because we make more than them, but because I work here and we've been
Yeah.
told what to do to feel, to be able
Gotta
to
play the
sleep at
game
night.
if you want to win.
So insurance is just another one of those things that like you just
It's
protect
a tool
yourself.
in the tool belt.
Yeah.
As long as you're using it responsibly with everything else at your,
Yeah.
at your discretion.
Mm-hmm. And I've got
Yeah.
renter's insurance, by the way.
Good.
Is that good?
For now, it's good.
It's like $7 a month, $12 a
now,
month.
It's good. I think it's probably required of you to live in a
Okay.
certain place. So yeah, there's stuff that you need to have. There's the necessities. You need health insurance, renter's insurance,
Yeah.
car insurance, right? And then there's the luxury items, right? And I think being able to decipher between like what's the need and what's the want and what fits, that's the help of the advisor.
Okay.
They should be able to figure out like, what do we need? What's a good recommendation? What's complete
Yeah.
and, have a conversation. This is not going to work for everybody.
Mm.
It's not meant to work for everybody, but, we'll kind of see.
All right. So you think?
And here we are. Just like the world of finance, the world of insurance is full of good things, bad things, and everything in between. Love, corruption, saving lives, ending lives. We could sit here and talk about it all day, but guess what? Brian's got a kid and I got to pee.
That was deep.
And Alex is giggling in the corner, but you know what? He's got to skip traffic too. Mr. Bryan Miranda, Director of Insurance.
All right, I got to go.
Well, thank you guys so much for being here. Drop a like, comment, subscribe. Say something funny. You got insurance questions you want asked? We're going to get Veronica on here, hopefully, to answer them. So drop an insurance question. Say hashtag Veronica. We want you to come on the show. Danilo, Ross, whatever you're thinking about, whatever you're wondering, just let us know.
Mr. Rogers.
I know I had to plug it. Well, I'm working on plugging it. Everyone says like you don't say subscribe or shit. So I'm like, okay, I'll say subscribe. So like, subscribe, tell us.
Point at the thing. Isn't there things at the bottom of the screen?
Good point. Wait, well, you
There's
should
a
say it
subscribe
actually. You
button.
say it. No, you say it. You say
Yeah,
it.
there's a subscribe and a like and
right
a heart.
here. Like, subscribe.
It's just Red Bull now.
Alex, do you want to? Yeah, it's just Red Bull.
No, you're good.
It's gross. I have to pee so bad.
I'm turning
You
it off. Yeah, you're good.
Nothing but trouble on my mind. That's the attitude that got my ass off the sidelines. You either ride.
Please remember that nothing we say here should be taken as personal advice. This conversation is for entertainment purposes only. If you have questions about your financial situation, please talk to a licensed financial advisor.